All right. Good morning, late morning, and welcome back to the watch list. Thanks for sticking it out with us. We really appreciate your support. Like your likes and your subscriptions. Really do appreciate the help with that. And then we're kind of growing. We got some viewership picking up from last week. We missed you on Thursday. I had to kind of scrub things at the last minute. Had some family fun. Gotta take opportunities for family fun, especially in the holidays, man. And it's very important to kind of have that work-life balance. Well, if we call this work. But anyway, thanks again for subscribing. I do apologize in advance if I'm not always like Johnny on the spot with the live chat here on our stream, but I do my best. So if you have any comments, or you have anything you want to ask us about, feel free. Just be patient with us, so I'll get to them. Even if I got to get to them all at once at the end of the show, we'll deal with it. But anyway, we got some new themes to kind of pay attention to, and a couple of swing trades setting up, and then there's a little bit of anticipation where we should be kind of not necessarily just nimble, but patient. We have to kind of wait and see what the end of the week brings us after New Year's here, but some stuff is starting to come into focus, and I even have some homework for you guys a little later on too. So thanks again for joining us, and I'm going to turn it over to Matt. He's got a couple of themes to kind of focus on going into 2025 to talk about, and then we'll get into some charting.
Yeah, so people who kind of follow our work know of the heat formula, and the T is for themes. So big believer that you need to be positioned in where the major themes either are or where they're going to be. This week, just not a whole heck of a lot going on. So, and I've been more laser focused on, all right, where do we want to focus on next year? There's the obvious AI. Everyone who's used anything AI knows it's a game changer. The less obvious is second and third order. Second order in AI is what you need to make AI work: the infrastructure, the energy, the data centers, all the connectivity, the software, the hardware. Third order is more interesting. Those are the companies that are going to be hurt by AI. So the thing you want to be focused on next year on earnings reports is who is saying AI is eating into your profits. Those are the guys you want to be short. Other themes we're looking at: quantum computing, and second order, not third order yet in quantum, because quantum's a couple years away, but quantum computing is going to be big. Keep an eye out for an ETF from us in that. Self-defense, still a big favorite of mine, the guns ETF. European aerospace and defense, got an ETF for that too, EUAD. You want to look at the private prisons, GEO and CXW. That's a Trump trade. Drone
Definitely.
stocks, same deal. That's a Trumpish trade. Anything crypto related. This SEC commissioner is going to be a game changer. This White House is going to be a game changer. I got to figure this weakness in crypto and crypto stocks is a gift. So you want to look at that. And then I also think the Fed is way behind the curve.
As always.
You want to be looking at precious metals, and it's extended, but if you get any sort of dip in Argentina, I'd be going in there as well. So those are my major themes.
Some of the miners started bouncing around a little bit, and one of my old favorites, and I actually was a ghost in stock twits for like better part of the year. Finally popped up. Don't trade this thing. It's like very cheap. LODE. It's like sub $1 still, but it picked up a bunch of volume out of nowhere yesterday, and I still have, as I say, high hopes for that company, but that doesn't pay the bills. So of course, trade it accordingly if you're going to. But I did notice that there was some things kind of taking shape in the mining industry that are starting to follow through finally, and playing that into metals and a bunch of Trump trades setting up. And then you go into, well, all the hardware is developed from these precious resources, precious metals, platinum, silver, gold, all this stuff kind of plays into a lot of what's quantum computing going to need. So mining is going to be one of my focuses coming out this year as far as themes go. But I'm also looking at the long-term stuff being disruption. I can see that there's going to be some serious changes in the automotive industry, and we were talking about before the show here. We're looking into some disruption in that, being that a lot of the domestic, and I don't call them domestic anymore because most of them are Chinese and European, but companies are kind of in the final stages of digging their own grave. And here's Tesla being one disruptor in that, but then you've got all these Chinese EV companies kind of scampering over all of this other stuff. Has anybody lost focus on what is to come from the other part of this, which is hybrids? I mean, you kind of put the electric vehicle together with the combustion engine, and you get better efficiency. Throw hydrogen in that or whatever you have for secondary energies on that. But I can see that there's going to be a lot of big change in the automotive industry this coming Trump term, basically. Let alone the tariffs. That's going to be kind of another game we got to play. But I think there's going to be some good opportunities coming out in that. And then for homework, I'm going to kind of direct people to another channel called Connect the Dots. Go watch their latest video, and it explains how even Toyota is in the hot seat for sinking themselves quite a bit here. A longtime favorite of mine is Toyota, but you look at the amount of disruption in that field, and then you realize there are still very, very beneficial opportunities there as well. Only if management takes it in the right direction, and I think there's going to be some bigger changes in that whole thing once you get some of that out of the way. So pay attention to that sector. It's going to be interesting. But, like you said, playing quantum computing into that is a couple of years out. All the energy demands are going to be, of course, the short-term stuff. And then there's hardware. I mean, we're going to be looking at a couple of the chip makers and a couple of the competing computer and software industries as well. And, one we were mentioning was, I didn't look at MU yet, but we're looking at kind of a reversion trade set up for MU in the short term. Do you see anything a little bit longer, and maybe IBM, and then possibly into dare we say it, Intel?
Yeah, MU I took off my watch list. I still own some calls. I mean, you never know, but that used to be one of my long-term holds. It's not anymore.
Yeah.
IBM and Intel, on the other hand, are. IBM short-term probably looks more like a short than a long, but I do think they are going to be a big beneficiary of quantum. Intel, I don't trust, but I think they could also be a beneficiary of quantum. And I do like Intel down here.
I think I might like Intel a little better than IBM on the short term.
Yeah, totally.
It did close that gap. We did see IBM kind of hold that midpoint in that gap. We plotted this out. We talked about this last time, and it nailed our targets. By the way, we're damn good at that. But looking further out, if it doesn't hold here, that does have that ominous double top look on IBM. Whereas you look at Intel in comparison, and it's like bottom fishing. Intel is kind of surfing along the lower support ranges here, and due for a rebound. So, maybe the short term would be Intel going for full reversion to $31. That's possible. But here we got to watch for a reversal here. This has to be a nice area. And again, the disruption is going to be management needs to literally boot itself and then reboot itself to get this whole thing underway with IBM or Intel at least. And we talked about this months ago, where it's a management issue, and we even with the sinking earnings calls, we saw management issue, and that needs to change. If it doesn't change, crap, just let it go. But in the meantime, if it does, there's opportunity here. We always profit from failure, and we can also profit from the return from failure. I think IBM.
At the end of the day, the companies have to execute. So
Exactly.
we will see. And that's that's IBM, that's Micron, that's Intel. Those all three are kind of in a prove it to me area.
Exactly, and that's where trading opportunity comes from. When we see, okay, if they start to prove it, cool, we take advantage of the trend and we ride with it. If not, well, we just look on other things. That's a great thing about being a trader. We don't have to give a crap about the companies we invest in, short term or long term. We just trade the chart and move on. So, this is one of those things where there's plenty of opportunity here. We can, watch for the reversal, and it's starting to kind of take shape on the daily chart. Keep an eye on this, going into the new year here in the first quarter. If we break above resistance here, about 20, 21 bucks, we got a pretty good shot at reversion trades. It's starting to resemble a bit of the old infamous IHS down here on the daily. We got the left shoulder, the head, the right shoulder's right here, the neckline, the pivot, obviously about $20, $21. So keep this on the radar for sure, and I do like it here. At the point where it sold off for that bad earnings call, I did sell some puts on that, a little bit jump in the gun type situation, but I did profit from that, and it wasn't the most spectacular profit, but I'm pretty much out of Intel for now. But I might be considering taking another long if things start to shape up here. But comparatively, you go into IBM and it's just a wait and see. Yeah, it did close the gap, but IBM does have that ominous double top look to it, and that's going to be kind of if it follows through with this and gives us the support test down here to like 207, if it bounces there, cool. I could see this being a long-term giant, and yeah, quantum will be great. A couple years out, that it's going to really take swing. That kind of makes sense. Maybe by about mid-second quarter, we should see a reversal in there if things follow through with the current technical setup. But if it bounces here, sure, we can just take and switch our minds just as fast as they can make or break their own company. So we'll roll with it. We'll see what happens. Definitely one to pay attention to. And then let me get my list going here. Where are we? We're looking at a few of the other situations where the short-term energy supplies, like EQT, is kind of back on my watch list. That followed through, met that 46.20 target pretty well, came over it. Now it's support in that area, and looking at the 2-hour chart, we've got some opportunities here. If it breaks out of this, and a 2-hour 1-for-1 has been done, we scalped this already. We're looking for, if it holds this range.
Oh, go ahead.
I'm just looking on the technical side. If it holds this range and starts to become bullish again, this is like kind of the area where if you see this as a cup, sort of, there's where the handle would be. If it touches support down here at like 45 bucks and gives us a good bounce there, cool, we can start shooting for that 49.50 area for a breakout target. But as far as it being a long-term theme, just scalp it. And I think you were going to probably mention that things need to kind of consolidate in this area. Is that where you're going with that?
Well, no, I mean, not necessarily. So, I'm a big believer in, the whole AI power theme. And I'm also a big believer that it's all of the above.
Right.
But I think the most, the best opportunity short term is the nat gas name. So EQT and AR, again, I don't have the time to be trading. So those are long term holds for me.
Right.
But I think from a shorter term standpoint, the nat gas names are where you want to be. I think you want to have everything. So the other one, actually, I just bought yesterday or the other day, I don't remember when, I've been waiting, is BTU in coal. I totally forgot about that, but take a look at that chart. You've got all sorts of interesting things going on there from the long side.
Oh yeah.
Undercut and rally at a couple of significant lows. Just broke above the 10-day moving average today. I definitely like this here. Especially now that Trump is going to be in, and you're not going to have a war on coal.
Right. And we did see some volatility in that. Once the regime change came out of Trump, we saw some basic trades set up that were just glorious on BTU, and now it's kind of in a support area, right in the right time frame. So yeah, Trump coming into office. We did look at this possibly going either way, though. If I looked at the weekly chart, this is let's see here, starting in, let's go at 16. So early part of Trump, round one, yeah, we had some hellacious bullishness. And then, towards the second half of that, it kind of fell through to support. And then, of course, the massive drop in energy demand when you shut down the country for a stupid virus. Yeah, we can see that in the chart too, and then the rebound from that was glorious as well. I got some really old dope on this chart. I've been trading it for a long time. Here's the area where Trump comes into play, and we're right in a support area, but it's one giant weekly bull flag here. And if this is the point where support is found and we start to trend out of here, yeah, coal could really rip. We looked at possibility of, okay, if things go bad, sure, if he gets basically deadlocked in Congress, and they're going to try and fight for the short term, I'm sure. But you look at support for reversions down in the $10 range. I think we're going to probably be more bullish than bearish at this point, but it can, if it does pull back to this point, if there's an early attempted war on this thing, we get some more opportunities. But in the short term, yeah, we've been kicking. But I always tell people, pay attention to those liquidity zones, and this one happened to be on the daily chart. We just basically looked left this big wick right here, and that's where all the buyers were. Sure enough, they picked off the pivot, back through one full day bar from A to B in that zone. And we trade these on a 1 second level sometimes, but it's all the same. The daily chart gave us that range, and that trade was just beautiful. Now we're just looking for, if we consolidate, next target's easy, $21, $22. This thing is such an easy chart to trade. If you're in tune with it, it just prints money for you. It's really a great.
I've made a lot of money through the years on BTU.
Same.
I definitely love that. And then there's some. HCC is another one. It looks pretty much the same. I just prefer BTU.
BTU just for me seemed to be the more relaxing trade. It's just such a basic price action chart. It's got the right balance of risk to reward in it to where we just roll with it. The technical analysis just pays the bills on this one for me. So
yep.
Yeah, that's why I like to be.
Another one in the energy space I would be keeping an eye on. I wouldn't be buying it here. Is Enphase. Again, I think the energy need is going to be all of the above. The obvious Trump trade was short solar, which I did and was great. But again, I think you're going to need everything, all hands on deck in energy. I'd want Enphase to break above the 50-day moving average or show some sign of life. But just something I'm keeping an eye on as a possible.
This is one I traded back in the day. I remember back in late to mid 2018, I was trading this thing and killing it. But yeah, this thing is a major major mover when it comes to trends. Obviously, you look left on the weekly, and it's just huge. Now we're in that second level market structure move from this whole capitalization period on a weekly, and it's kind of ripe for a good reversal here, or at least a rotation. And as far as I know, they also have some innovation in energy storage, particularly like big battery banks and stuff like that. And I know that there's been a little bit of clamoring over market share in that space for storage, but I think these guys got it down where they have an advantage on that whole sector. So I do like Enphase here, and just put some quick dope on it. It's pretty easy reversion trade target right there, about $90 in the short term. And if we show some signs of life here, we should get a nice reversion trade out of it, and then pay attention to the gap as well. You've got a gap right here that's pretty obvious. It's so nice it hit it twice. So yeah, I like that on the walk back up too. So about 77.20. Look for this to be a liquidity zone right in that wick there, of course. The pivot goes right basically through the middle of it. I like this chart. I just need to wait for it to follow through with a reversal down here, and then we should be in business. But we did have a nice double bottom here down on a 2-hour chart. That was pretty easy to trade right in here. And then right to that liquidity zone, that was also reversion. All we got to do is wait for this follow through with consolidation, and we got a pretty good shot of running that to break it down even further. Let's run the primary, secondary setup. Stack the boxes. It takes us right to that liquidity zone. So good short-term trades. Just waiting here. We'll be patient. Good eye on that one, though. I haven't looked at InPhase in forever. Definitely a company I do like trading. And then let's see, half a move. You can also see these 2-hour wicks right here. So about $73, $74 is also a good range. Kind of scatterbrained when I do my TA, but it all pays off. I just got to be patient and let it sit there and do its thing and then trade from one to the other. Another one we looked at, what was that thing? I already looked at EQT, didn't I? Yeah, that was already charted easy. But then there was the other part of the quantum computing side of things. One that popped up on our radar last week that we looked into and we nailed was QUBT in the quantum computing.
Yeah, interesting. I'm waiting for all these to pull back.
Same.
And down 8.58% when you've gone from like half a cent to $17 in a couple months isn't quite enough of a pullback for me.
Right, it needs a little bit more. Last week we were just looking at basic measured move target, and it came out of this wedge. And this is where I take and I just measure the size of the second impulse in a wedge, and that was the old trap detector right here. And you can see it ranged exactly the top of that sucker, pulled back, gave us a full reversion move right down to support, and it's so nice it did it twice. It gave the half back, and now we're just sitting here waiting. If this thing gives us a nice reversal here in the base of our trap detector and then gives us beyond a reversion trade, we could still trend with it. Long term on the weekly, this thing's been parabolic as all hell. We don't really have much to look at for basic market structure other than the fact that it's already just finished it and blown everything away. So, here's your capitalization on the weekly. It all accumulated back here and then just bang, that trend was just dead on nuts. Now we're looking for, we need to come back to reality. We need some pullbacks. We need this wedge to finish doing what it's going to do. And we're right in an area where it's got opportunity. We can see if it holds this support area right around, like you were just saying, about 16, 17 bucks. Why is that shaded black? Then we get a 1-for-1 move here. And here is what we do. We take and measure the whole primary move. Take the secondary move. This is where we stagger the blocks, basically. Half move is right back to the previous high. Whole move is even higher. And long term, if we do trend here and it goes nuts, first target 25, 26 bucks, second target 35 bucks. Pretty obvious on this thing, but this is where it's got to happen. It's got to have a nice reversal right in here. If not, don't trade it. Just wait for it to patiently do its thing, and eventually it'll give you another setup. But for now, that's where I'm looking. And last week we killed this move. This was easy. Next is not so easy, so be patient with it. It'll give us some opportunities. Just give it time. Let's see here. Brian said, I have some Intel options through earnings. Usually there is a bit of a short squeeze into earnings. Shorts don't want to hold it through it. Yeah, usually they're going to take profit right on the last minute, sometimes right in the first couple seconds of the earnings call. They're going to scalp that for sure, but if you convert yourself into an option seller at that point and you got in early enough on the earnings run, if let's say you're running debit spreads, you can invert that into a butterfly for a net credit and lock in your profit and still have a position to really kill it. You don't have to do it the whole thing. Take a percentage of it to take your risk off, cover the rest of your risk in the position, and then you just get a free position. There's some strategy to that. But if not, just take your profit running up on earnings day and then wait and see what happens afterwards. So I always kind of tell options traders, it's not just about trading the options, it's about being able to adjust that position. And that's a strategy all in itself. It sounds complex, and it is, but it doesn't have to be. It can be just as simple as converting your position into something else. Options are kind of what pay our bills, so we know a thing or two about them. As far as another chip situation goes, and we talked about this in the group earlier, and I'll get to DXY in a moment, but let me talk about NVIDIA. And we did brief a bit about NVIDIAX in the group this morning too. We're
Very
looking
cool.
at an area where we're kind of make it or break it here. We're humming along just under this liquidity zone. We've been flirting with the pivot. Didn't pull back all the way to what I wanted. I wanted that 117 to get nailed, and it just said, hell no. This descending channel at the top of a trend typically will be bearish, but not always. Sometimes you get a bounce back, and we're humming right along this pivot. So we will get a trade opportunity on NVIDIA in the short term. But be patient with this going into the first quarter because we still have a lot of range in this move possible, and we could test support down here at like 132 and some change first before we do anything with the trend. But right on the end of where we would expect something to change direction, and if it becomes bullish here, it doesn't have to follow through with what the daily technical is telling us, or this should be a breakover. Not necessarily true. It's dirty and choppy as hell, but this is still resemblant of a classic cup and handle, only the handle's a little higher than you expect. This was the first part of it here. We got all through that. Sometimes you get a longer term situation where you end up with this descending channel. It finds support and then just rips a face off. So be aware that all of this is one big ass primary move, and yeah, that can happen. We could see this thing push the 200 bill. Very possible. Distant future, maybe going into the end of next year, maybe. But it's got to get through this stuff first, and this is where all the investment needs to start paying off, and then quantum computing and AI need to really take this to the next level. So we know where the resistance levels are. They're pretty obvious, 140, 148, somewhere in that neighborhood. If things break out from here, yeah, it can really shoot. But in the meantime,
Watch the 50-day 139.91. Right now, short term, this looks more like a short than a long. I'm obviously a huge intermediate long term NVIDIA bull.
I
I
agree.
wouldn't be shorting it here just because I don't, the past couple of weeks, I don't trust this market action. But if you put a gun to my head and said, hey, you need to do a trade on NVIDIA, I'd short it.
Agreed. It's kind of it's not the best time to be risking a short in this because it can absolutely about face and rip you off.
Yep.
But this is not necessarily a reversal or a continuation pattern. It's a I have impending volatility pattern, and that's typically what we get, a descending channel like this. So once that volatility starts to take momentum, be ready to be nimble in this thing because it will give you a good opportunity, long or short, very soon. And if this then that comes into play, this rounding over, we got the primary range bar here. This is where the base of our measured move is. If we break here, we trade to here. If we hold here or here, the reversion trade is obviously prominent. And if we break above reversion, then it's just if and then statements. Set yourself up like you're writing software. It's just a bunch of if and then. If this, then that statements, if and then. Play through with it. It'll give you some opportunities. And I think this is going to give us an opportunity to really either take advantage of running spreads on NVIDIA so you can minimize your risk, or if you don't want that kind of exposure or you don't have that kind of options experience, that's what NVDX is for. It lightens your risk.
Or you combine the two. You do a call credit spread on NVIDIA and use the proceeds to buy NVDX calls.
Exactly.
Something I like doing a lot.
And that's where we come in to pay our bills, guys. Those option strategies, as well as having one pay for the risk in the other, that really starts to make sense when you've got the opportunity to take a single equity leveraged ETF into your advantage. And I'm not just trying to sell a product and tell you to go trade that thing. This is legit how we make our bills paid. I mean, it's just as simple as that. It pays our bills. As far as limiting your risk in that, if you don't have the experience, that's the other thing that NVDX is for, is you get 2x leverage without as much risk. So, I mean, if you're just holding equity and, it moves up or down a couple dollars, that's much easier to deal with than, running NVIDIA, even with an option spread mentality. There's thousands of dollars on the table at that point. So, weigh the difference. figure out what you're comfortable with and take advantage of the opportunities as they arise. And this is saying, I am going to be volatile soon. So be ready. This thing's going to be, let's be nimble in the first quarter situation. And then towards the second quarter, at the middle of the second quarter, I think we're going to have some expansion in this range, and it can go either way. This is like insane sky's the limit situation where hopium and drumium will trace it. But if it rejects here, cool, we just trade the other way. We don't care. Just trade a damn chart. Let me get into a couple other things here. One that I found kind of funny yesterday, although it would have been funnier to take place just before, Columbus Day or something. The high of the day yesterday on TripAdvisor was $14.92. I don't know, man. That's just a crazy nerd side pun coming out. It made no sense, but it did establish a liquidity zone, and it gave us a reversion trade, and possibly a theme to be looking at is just basic rotation for the consumer. I mean, I'm planning vacations this coming year, and I know I'm not alone, and there's plenty of places to go and things to see still. And you're going to start seeing some of these other, like some of the cruise lines start to rotate a little bit too, I'm sure. But to me, TripAdvisor looks like a pretty good long-term setting up. This is basic market structure doing its thing. This is the second wave of accumulation. We could have another shot at reversion here.
Actually just broke through the 50-day. I mean, it's too noisy a chart for me, but
it's pretty noisy. And we break this LZ here. We got a pretty good shot at running up for another reversion attempt at $18. And if not, we just scalp it in between. So it's a great chart for day trading. It's dirty as hell on the daily. The 2-hour gives us some good smoothness to it, and we can make short-term reversion trades too. Like look at this accumulation; it's right there. Now 1550, pretty obvious target if we break this LZ here. And it's just a great trading chart. I just enjoy trading this thing. I don't even care what they do. But you get into finding something like this, and then you go relate it to let's see here. How about CCL?
I'm actually short RCL.
I mean, it's a bit parabolic, So yeah, it'd be a good short for CCL and RCL, I'm sure.
Actually, I'm up 27%. I've been short for a while. I'm up 27% on it.
At some point, we're going to find some support there, and traveling.
I mean, it found support at the 50-day. I mean, if this wasn't last day of the year,
right,
I'd probably cover. But I mean, God knows what Thursday is going to bring, and it's still a fairly small position, so I'll probably just keep it, see what happens.
I think volatility-wise, as long as it holds here, it may give us a bull opportunity later. But yeah, I think a good short is appropriate here, at least down to the next zone here, which is pretty obvious on the daily. You got a little bit of a wick here, some buyers down there. Let's see if this thing gives us some opportunity to make some swing trades in RCL, CCL, a few of the other cruise lines. Kind of about the same chart, really. RCL is just a better one to trade because it's a little smoother. So trading's what we do. If by some chance in hell we get a nice clean double bottom here and we start to break back into a bull trend, cool. Your short can close and you can flip your position. But in the meantime, I think that the whole sector is due for either some pickup into continuing the trend or reversals. Who knows what the first year of the Trump administration is going to bring us for travel, but it's been doing pretty good on a weekly. I like that trend. It's pretty strong still. It's got good potential. Let me go into look at DXY here. So let's see. DXY at the daily high, pressuring indexes. Yeah, I guess you can kind of say something like that. This is the U.S. dollar index here. I used to hedge with this thing a little bit, but I used to do it with UUP. I don't do that anymore. I freaking hate waiting for K1s to come in my taxes. I can't stand them. And,
yeah, K1s suck.
Yeah. Avoid it at any cost, I do. But long-term wise, I mean, yeah, we're kind of making the dollar climb a bit here, which definitely will put pressure on the indexes. I agree with that. I used to use that as my inverse hedge. Is basically it. When a dollar becomes worth more, I tended to wait for reversals and end up being short the dollar to hedge my long positions on indexes, but vice versa. We can go either way with this. And yeah, you throw the technical analysis at this pretty simple chart, primary, secondary. It's made a 1.5. We're hitting resistance here at about 108.75 or so, I think. I'd love to see a nice wick like this stick out of there and a pullback to a reversion to about 106.80 or so. But I can hope and dream all I want. I have to wait and see what the chart tells me probably after the first of the year. So we'll see where it goes. Thanks for your comment. And we had a couple other things to look at to refer to. Let me go back and look at Apple real quick. Pretty much nailed the half mm target on the first measured move here. Didn't quite give us the follow through above half of the full block here. We in fact broke below the pivot here on the daily. Watch that 20 period. If we start to see support here and a quick reversal, cool, we can continue trending on up to 282. But if we break here and we do have the tail end of a broadening pattern here, a quick short trade to 246.50 is possible here. And then we'd be looking at, well, does it reverse and continue on, or does it break the trend and start to come back for a retracement? So Apple might give us a short-term short here, and then long-term long eventually. But be nimble here because we've made half our move. That's pretty much where I took my profit off, and I'll roll some stuff out for later. But all of my long-term stuff has been profited in the last week, and I'm just chilling. I'm going to sit tight and wait for this to follow through. As for a couple other trades to go and look back on, this BMY trade nailed its target. It's done. Now we're looking for possibly a decent short on that bad boy. We could be going for reversion trade.
Interesting spot.
It's broken below the 50-day.
Broke the 50-day yesterday. It tried to rally back above today and failed.
So if we close an inverted hammer here, we might have a decent little short here and then close this gap and then probably appear somewhere down on our liquidity zone that we printed out, which is about the middle of our measured move. So Bristol Myers looking like a decent little short. If you want to pick up a long down there, wait and see. Be patient for a reversal, of course. But for now, it's looking like it's popped up on everybody's short radar. So let's just follow on the coattails of the smart money, guys. It's pretty easy. Be a little bit more aware on short-term stuff like this, though. Sometimes you'll see the obvious here. It's a wedge, and it may find a little support about half that expected move. So we might see it move to about 55.30 and give us a little bounce here, or find some liquidity in this wick here, if you will. So we may see this thing give us some volatility instead of just a straight up short to the reversion. So be nimble if you're going to scalp this thing. Did you get in on that NFE move?
I missed it both times.
Oh, man.
I managed to miss it twice. First time when you told me about it, and then when it came back down and did an undercut and rally at the 20-day, I missed it again.
Oh, man. I pretty much killed that thing. I might be a big participant in some of these red candles here, guys. Just to say, I took some size into this one, but now I'm patiently waiting for this to just give us another setup. But man, what a trade! 1592 never quite materialized, and of course today we wicked at 1558, and I'd expect some accumulation. Let me stretch this out a little further. Let's see if we hold support about 1475. It might give us another go at possibly hitting that full reversion target here, but market structure tends to have waves, and we've kind of seen the wave one. This is wave two. Let's see if it consolidates in this range and continues. If it holds here, this is where we'd expect the trend to begin, is above that 1590 area, which is just basically the top of this bar to the left, obviously the last accumulation zone. It may give us another opportunity yet to go after that $22 reversion target there, but be patient. Let this thing work its volatility out first, and then we'll see where it goes. It can give you some fits and break below the support and go back into market structure range. That's possible too. We've seen that before. You look at stuff like Snap, for instance, which is one of my more famous market structure trades. It did everything and then some, and then gave us all of this wave 2, wave 3, wave 4, back and forth. Never quite broke out of that key resistance range to give us the full reversion. So this can happen with your NFE as well. It's very possible. So be nimble on this thing if you're going to continue trading it. But for now, I'm pretty much done with it until it gives us another setup. So I'm out of that one. SSRM, kind of a similar story. Different situation, obviously. It's not a market structure thing. This is more of a let's trade the reversion, but let's be nimble to take our profit before it, rips our face off. And back on a 2-hour chart, we had that 1.5 move with a big old wick. That was a signal to get the hell out. IMU 571, destroy me. It got depth charged back to. Sorry, making Navy puns. Running back to support at the move back. It can set up for another run here. This is one of my trade it when it's hot type of mining companies, and this one particularly always gives me decent trades. This was a hellacious short. I missed that, but I caught the dead cat bounce. Now it's just let's wait and see what happens with this pullback, and if it accumulates here and gives us another swing, above $697 or so, we could see this
again,
return.
I'd reiterate, be careful, because all the other miners look like crap.
Yep. This is the one that looked great when all the others were looking like crap. So I took this trade and I'm done with it. But yeah,
I mean, genius trade.
Pretty easy.
Missed that one too.
And hell, if you look back at that daily bar, it's like that target was right there. It gave you the target for that 1.5 move. It's right in there. It'll give us another setup soon enough. This thing stays pretty volatile here, I think. And if you look at the news stuff on it, they bought a whole bunch of property from NEM, or Newmont Mining. They might be making a turnaround. This was the massive destruction of their mine in Turkey, and this is what management does. They try to save the company. Well, they're doing pretty good at it. It's volatile, but there's some things in motion. It'll give us another trade. Just be patient. Let's see here. A couple others we were looking at. Did you get that upstart short?
Do I still have that? Hold on. It may have expired. Nope, I'm out of it. Great. No, I'm out of it.
It's looking like the gap on that daily is just itching to close. I would say be nimble at around 60.30. If this thing doesn't break that, then you could take some profit off if you did take that short with us. Otherwise, the full move could all the way back to $50. This thing is still on fire. There's a pivot right here at the bottom of that gap, obviously at about 55.60, a little bit below a half measured move from our previous high, but it follows through pretty nice. This has been a decent short.
I just bought some puts. I like that chart.
Me too. It's nice. I'm already in them, but yeah. Great shorts to be had from that one, and then
I think whatever I had expired last Friday, and I didn't roll.
Yeah, it was. I did roll some other stuff around, but I'm not always quick to roll some of my short stuff. I tend to roll my longs more than my shorts, but this one was just another let's get in and get wet opportunity, and sure enough, yesterday was a good day to buy some puts right in the open there. So, hitting the mute button to cough a little bit. I got a little cold going on always, every winter. But anyway, yeah, this thing's looking great for a short. And there were a couple others in that sector. I can never remember the stupid ticker for that thing. Hang on, I'll find it. Affirm, AF.
Yeah, I was looking at that to maybe short it this morning.
Affirm has been kind of a relationship building stock. Yeah, I know people who chase this thing all the way to that $176 area, and I was in a process of teaching them how to sell premium on that to kind of recover some of their cost on that. Hopefully by now they've done that. Market structures had its way. It broke above that key pivot area, of course. It gave us a beautiful measured move right to 72.50. Now it's coming back for the halfback, and 63 seems to be a key area that it did break. So we're looking at the short-term stuff, possibly a decent bear trade coming out of this thing, and maybe a reversion down to like $55 is pretty prominent. Let me throw this down here. This wick here is pretty important to pay attention to, and it's pretty much a reversion of that previous trend here. You can see right in the zone there. So this might be another decent short to look after as far as taking some good scalps for some bearish moves.
I would definitely short it if it breaks the 50-day.
Absolutely. And this is where some people see this as a double bottom, and other people see it as a bear flag. So right in this range here, if it breaks, obvious target, pretty easy trade. So yeah, be nimble with this one though, because this thing gets a lot of attention from retail, and it's not quite a meme stock, but it kind of is. So sometimes people will just catch you by surprise, and you watch the folks over there at what is it? Not StockTwits, but the other big guys. You know what I'm talking about, the Reddit team. If they start chattering about this thing, saying, "Hey man, buy it here," take your trade elsewhere. But for now, the short-term bear target, pretty obvious there. About $56 to $57 in that range. Looks like a nice trade to me. And it's just one in the sector of a few. And then there's PayPal. Same kind of scenario, different day. This is just market structure doing its thing. We're right in the key area here.
Hanging at the 50-day too. Looks a lot like a firm.
Yeah, and if it breaks that sucker, easy reversion trade, 80.50. Pretty nice $5 move coming right up. So again, this is another one that I took the long on, and I've killed it here. I rolled some YOLOs out later just in case it bounces here, because I'm not necessarily short on this yet. But I already took some pretty nice profit on that YOLO and covered the risk in the remaining position pretty easily. So it can sit there and expire. It can do whatever. I don't care. But in the meantime, I might take advantage of a quick opportunity to run the other side of this. I might run some put debit spreads and target down here at about 80.50. Maybe take the extension, so do a spread between like 80 and 75 or somewhere in that neighborhood, or even so far as 75.70 just to be outside of it and take advantage of the swing. But it's got to break that 50-day on by the end of the week here before I can get on board with shorting it for me. But keep an eye on it. It's going to give you some opportunity pretty quick. I think we're at least going to be able to scalp it one way or another. Looking at a couple others, and then we got to kill it because we're damn near out of time. It flew by today. Where did that go? I have too many lists here. It just gets out of hand sometimes. Dun, 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 dun. Oh, there it is. Let me grab this here. This is when we talk about on and off again, and I know Kramer tends to be all over this stupid thing too, TMDX. Kind of in an area of support, but I just do not trust anything in this freaking sector ever. But the shorts
what is this one?
This is one that I was asked about 6 months ago, and I immediately realized there was a nice bearish trend on this thing, and it broke beyond my expectations. It made a 2-for-1 move down to the week below the weekly 200.
Oh, it's biotech, transplant therapy for end-stage organ failure.
Yeah, and
these are always tricky.
As history goes, these things hemorrhage money for decades before they ever make any profit. It's just the biotech's mode of operation. But that short was glorious. I'm done with it now. I was done with it a couple weeks ago. But now I wonder if it'll find a quick reversion trade. So be kind of watching this thing. If it breaks above $66, the easy reversion is like $88. That's quite a bit of range, and it can give you some scalps in there. And half of that's about 72, 73. $10 range is more reasonable. But keep an eye on this thing. It'll give you a nice little reversion trade setup before it continues to slide down and hemorrhage money like every other biotech we've ever traded. But market structure does not necessarily work with these things. They get chased up by hype waves and FDA news and all that happy crap, and then they just bleed forever. So either scalp the little reversion trades or wait for them to complete and then short it again. It's really that simple. Biotechs pretty much all do the same thing. Yes, they're volatile. Yes, they're fun to scalp, but only that. I would never invest in one. It's just not me. Another one that we like to look at for all intents and purposes, well, two of them. Let's go with NVO first. This was an obvious short that we, pretty much were on top of, but now we're kind of coming into, well, we found almost to the weekly 200. Can I throw it? I'm going to borrow a pivot. I get too many lines on my chart and I just get overwhelmed. My eyeballs can't take it.
While you're doing that, I don't know what to do with these weight loss drugs yet. I want to see, does Bobby get confirmed? He's going to go to war with these guys. Is he going to win? Are they going to win? Yeah, I before this whole thing, I loved NVO. I loved Lilly. They were long-term holds for me.
Right.
Now I'm staying away. Like I think I have.
Well, I think the rumor has been sold. But what's the news going to bring us?
We don't know whether Bobby's going to get confirmed or not. There's
Right.
going to be, there's going to be some people against him. Big Pharma owns most of Congress, and they're going to be against him.
And stonewall him.
Let's say he does get confirmed. Now he's going to battle Big Pharma. Is he going to win? And the fact that if I'm overweight, all I have to do is take a shot versus doing anything else.
Right.
Yeah. I don't know where to go with these stocks. I think they're going to be interesting, long or short. I just think, now anything you're doing is more of a crapshoot.
Pretty much. I'm done shorting it. As far as support goes, it can make little balances. The rumor, as I was saying, has been sold, and the news is coming very soon. So I won't touch these until I start to see some technical analysis tell me to touch them. But for now, the short has been great. As far as LLY goes, it's got a little bit better of a chart. As far as it can give you a bounce here, but man, again, the rumor was sold. We're just waiting to see if the news gets bought. This is kind of the reverse. Usually it's buy the rumor, sell the news. This was sell the rumor, buy the news. So maybe we get a nice buy opportunity on this thing. Who knows? But pay attention to the political news on that whole thing. If Bobby takes a seat, yes, he's going to go to war with these guys. But, Congress has got a whole lot of lobbyists in it who will support these guys to the death. They're going to stonewall them. So this will be a deadlock sideways chart with some range to trade, or it will be an outright freaking bloodlust or possibly a reversion trade. Who knows? We'll keep an eye on it, though. I think in the first quarter, these things are going to start to really give us some opportunities to scalp the crap out of them either way. So this is something that I'm going to be looking at. And I'll continue to monitor the situation as it erupts. But for now, these targets were just methodical, man. Real easy trades. Anything else before we go?
No, just boring. Boring last. I mean, now it looks like the market wants to sell off. But
I'll take a quick look at QQQ. Why not? So we've been trading this thing in range, and it's been just kind of a let's just scalp the momentum type of situation. 2-hour chart gave us the liquidity zones, and we were able to walk back and through them. Measured moves been done here. We're breaking below. It's kind of an upper swing on the midline here. This should be down here, but it's an upper edge. Once we broke this area, it was pretty obviously a decent short for the day. Can we say maybe we find support about halfway between here and the next LZ? Sure, we could say 510.80 is a good target for the day. Pretty obviously, just throw a pivot under that bar right there. It's pretty obvious right in there. If we start to break that, this gap will fill very quickly, and then we won't find buyers until we're down here. So if this thing becomes a decent short going into the first week of the year, we've got some pretty easy bear targets down here back to the 500s, back to 505 and such. Pretty obvious measured move setup here, but be aware that on inauguration day, it's going to be a crapshoot trying to plot this thing with TA. We're going to have to wait and see what happens on inauguration day. And the market doesn't necessarily care who's in the seat, but it does care about the volatility in between. And that's where things start to really take shape for what the rest of the year is going to look like. So we'll see. I think we've got some pretty good opportunities setting up in the meantime. But as far as the general market goes, it's going to be let's let this thing tell us what to do for the long run, and then we'll get into playing the outcome of it pretty easily. So yeah, hey, thanks for the kind words there, man. Great charting. And I gotta say, we make charting look easy over here. We really do. I take things so basically with chart analysis, it's not even funny. It works. And simple is smart and fast and efficient. And if you keep it simple enough and you don't get buried in a spaghetti of all these different indicators and stuff, I mean, I don't even like using moving averages. I just trade the candles and basic price action. But I'm more of a day trader than a swing trader. But I can use the knowledge from day trading to generate some pretty killer swing trades.
And I'm more of a swing trader than a day trader, but I can use the knowledge from day trading to generate some good swing trades. So
absolutely.
There you go.
And not only that, it makes your entries and exits on your swing trades that much more efficient when you've got a little knowledge on day trading. And that's
exactly,
something I've been kind of preaching for years is learn how to day trade, and it's the hard way. But if you're a newer trader, learn how to day trade, or at least on paper. Learn how to analyze price action above everything. And once you've mastered day trading, really short, I'm running 5-second charts with students in there, showing them how to do that. You master that, and then you realize everything is the same from there on out, all the way out to the weekly and monthly charts. It's all the same crap. It's just price action. And once you've got the swing of that, dude, your trading efficiency just takes a whole new level, and you become really good at it. So I'm doing what I can to help disrupt that 90-90-90 rule. So I'm trying to help as many people as I can. So I'll ask of you, if you're watching the show, tell your friends. We're here to teach as well as provide lots of fish for you. We always pull out some really killer setups. We're really accurate. We still hold that 96% efficiency on our trading, or 94.6% efficiency on our callouts that we make. That's how good we are at this. And I'm not just tooting my own horn. We're really that good. And we'd love to teach you how to do it for yourself at the same time. So we're not just giving fish away. We're teaching in this too. So tell your friends we're here to help. We love helping. And that's all there is to it. Thanks again for joining us. We'll see you guys again on Thursday. And I'm gonna try and get Creed in here if I can. He's got some interesting stuff that he's looking at